Hey, everybody. Thanks for joining us on this episode. I'm joined by a good friend of mine and my CPA, Steve Hornbaker. So, Steve, thanks so much for joining me today.
Thanks for having me.
Steve, I've known for a long time, and he's a good CPA, so I can recommend him, and he helps keep me, I hope, out of trouble. So, anyway, today we're going to be talking about just real estate and taxes. And we all would love to minimize our taxes and how do we pay less taxes. And so we're going to just talk about a few things today in that. But of course, the caveat would be that when it comes to taxes and any kind of financial advice, obviously these are broad strokes and not something that we're trying to say, hey, this is something that everybody should apply necessarily, because everybody is a case-by-case scenario. But again, thanks for being here just to kind of talk some broad strokes.
Sure thing. Yeah.
So why don't we just start off with, just your typical homeowner. Obviously, we're paying our own property taxes, and that's a different thing altogether. But what are some tips and tricks and some things to think through to how owning a home can help minimize our income tax when we think about that when April 15th rolls around?
Yeah. I would say the biggest thing is your property taxes, your mortgage interest can help towards itemized deductions. Now, about 4, 5, 6 years ago, they raised the itemized deduction, or the standard deduction, to where it's gradually increasing every year with inflation. And I believe, this year it's somewhere around $27,000, $28,000. So for a married couple,
For a standard deduction.
yeah, for a standard deduction. So again, the biggest thing with a homeowner is if you have mortgage interest, and property taxes, and usually charitable giving, if you have that where you think it's going to get over that standard deduction limit, then you want to track all of those costs. So that's one thing. Another is just there's, and we can get into this later, but just possibility of home office deductions. There's this year, there's a bunch of residential home efficiency credits, so we can talk about those. But just owning a home, you just have to start thinking, what is there anything that I'm doing with my home that can possibly reduce my taxes?
Right.
And
So it sounds like the big takeaway would be that we want to do our best to be really good record keepers.
Absolutely.
For the most part, which
Absolutely.
I know is something that you're always trying to track me down when it comes to the springtime of like, hey, you got this or got that. But that's really one of the best things I guess we could do so that you can then decide, hey, this is a route we should go.
Yeah.
The standard versus the itemized deductions based upon.
I always tell my clients, it never hurts. Let's input everything, and then the tax software will give you the higher deduction no matter what. But we can't do anything unless you give me, unless we track all of those expenses and donor receipts and property taxes. Absolutely.
Okay. So keep good records.
Yep.
And then another thing that you mentioned was like the energy efficiency tax credits and things like that. So that's another big one that I guess that changes year in and year out based upon whatever.
Yeah. This year they January 1 they started a whole new round of them, and it's I would say get with your tax advisor on that. But if you've bought anything, furnace, AC, windows, doors, exterior doors, there's a bunch of credits that could qualify, and it's usually, for the most part, it's on, not on new builds. It's on, if you homes that you already just you're upgrading stuff. So if you've already done it, track those receipts and go to your tax advisor, because there's a good chance. A lot of it is it's energy efficient upgrades. So Energy Star rating, which is a government rating, they've got to be fit in those categories. But most of the time, I shouldn't say most, but a good amount they already do qualify. So just reach out and see about those. If you're we're getting near the end of the year, but if there's something you're thinking about doing, factor that in, because it's definitely worth consideration.
Gotcha. So I hear you saying it's not necessarily that we renovate our home that, and would necessarily be a tax deduction of like changing out tile or floors or things like that. But when it comes to something that's energy efficiency,
Exactly.
then it could be. So like a roof or insulation, things that might
Yep.
help that.
Yep.
Okay.
And there's a whole list of of qualifications, but again, if you're doing it, you might as well get the credit for
Yeah,
it. And,
sure.
you know, when it comes to paying your taxes at that time, if you could save, you know, $1,000
Yeah.
on tax, it's worth it.
Yeah.
So,
Oh, that's great.
yeah.
Yeah. And so obviously since the pandemic, it kind of like just threw a match on the idea of home officing. I know that was like a trend that had started to happen, and then the pandemic hit a few years ago, and then it was like so many people are working remote now.
Yep.
So when it comes to owning a home and having a home office, what are some of the tips and tricks that you would say in regards to making sure that we maximize any deductions available to us if we work from home?
Yeah. So the rules are it's got to be the space, and it doesn't have to be a whole room. It could just be a sectioned off space in a room, but it's got to be used exclusively for a business purpose. And so it typically is you've got to have you're a sole proprietor, that you run a business through your personal tax return. So yeah, what I recommend is, if just, even if it's not if it's you use part of a room, section that off and make it exclusively for the business, and it's for managing, your, all of your expenses and all of, whatever you do to manage the business. You don't, as a plumber, you're out on the job all the time, but you manage the business from a certain location and make it a specified location in your home. So then the rule is you take whatever square footage of that space as a percentage of the square footage of your home, and that's the business use percentage of that home office.
For all utilities and stuff as well. So if say
Yeah.
10% of your home's footprint is used for business purposes, you can write off 10% of your water bill, your electric bill, things of that nature.
Yep. Every expense of the home in general, you take that 10% or that business use percentage of all of those costs, and then if there's other costs that are directly related, then you would take 100% of that.
Gotcha.
So that's the norm, or that's the historical home office deduction, and on top of that, the requirement is that you would have to depreciate 10% or that percentage use of your home. So you take the total cost of what you paid for the home, and you have to actually depreciate a portion of that.
That portion.
So a few years back, the IRS came out with they called it a simplified option, where you basically just take that the square footage times, right now it's $5, and so up to a maximum of 300 square feet. So if you think about a 15 by 15, that's a pretty big office space. But yeah, so that equates to about $1,500 home office deduction. The beauty of that is then you don't, obviously it's less record keeping, because you're just using a flat calculation. You don't have to track down all your costs, and you don't have to depreciate your house or that portion of your house, because when you go to sell that house, you actually have to recognize a gain on the sale of a portion of your house that's a business gain.
Because you wrote it off as a business. So
because
that's the caveat. They're going to come back and get it sometime. It's just a matter of.
And so the IRS came out with let's just use a simplified method. We'll give you up to $1,500 home office deduction, and you don't have to write off your house. You don't have to.
Great.
So that it just depends on what type of work you're doing in the house. I mean, again, if you've got a whole basement and you're operating out of that, or doing more than just quote home office, I'd say probably do the actual cost method. But if you're just got a small desk and you're managing the business, I would say go to the simplified method.
Yeah.
And then I always tell people, you can't run a business without your cell phone, your internet typically. So, those are things that I would look at a little more specifically on how much to deduct, as opposed to just a general percentage of your home.
Yeah.
So those would be a little more home office related, but
sure.
Yeah, a little
Yeah.
more specific. So,
So again, the good thing is if you work from home in some ways, just keep really good records.
100%.
Yeah, that's the thing of like, I know enough about taxes to know enough about what you're talking about, but not enough to be certain when I send it off to the IRS that I'm like, okay, I crossed every T and dotted every I. So I think that's why it's a good idea to have a professional as well.